My next guest is tracking the options flows and does see some bearish signs in retail and in home builders. Chris Murphy is co-head of derivative strategy at Susquehanna. Chris, good to see you. Sort of tell us the world, how it looks from your point of view.
Sure. I mean, specifically on the retail, the XRT is a retail ETF, and we saw an outsized bearish trade yesterday, a March put spread buyer. I agree that, one earnings miss doesn't, tell the story for a sector. However, 70% of the underlying by market cap for this retail ETF reports by March. So, this is a clear bet that we're going to continue to see earnings misses or earnings that just aren't good enough if they're priced to perfection. So that was the trade yesterday that we saw that had a lot of information in it already with what we're seeing in Walmart, Carvana, et cetera.
Well, that's a warning note to investors right now who want to jump in and maybe pick up some of these stocks in the near term. Any particulars jump out at you? Any particular names?
We're seeing Ulta is a name that got hit on Warren Buffett coming out of it. We're continuing to see bearish flow there. The home builders have been faring even worse. So, of course, when we see this XRT trade, we're going to go comb through the individual names for bearish trades there. And that was one that stuck out. Not as many as you would think. There still is somewhat of a buy the dip mentality in the options. Even in Walmart today, some opening put sellers taking advantage of the weakness. So, if you don't necessarily want to pick a stock, you think that the consumer's slowing down a bit, why not look at that XRT ETF and get the basket of the stocks, hoping that more of them trade lower than trade higher.
Yeah, so that's, again, a way to kind of think about what the next few weeks could look like. What about on the market more broadly, which to Dom's point, we were at record highs just yesterday?
Yeah, I wouldn't get too concerned with the sell-off today. On the broader market level, the biggest takeaway is low correlation in S&P components. So different sectors are moving in different directions depending on what Trump says or their individual earnings or whatever else. The S&P itself really isn't moving too much. And we're seeing much more of our client focus on sector level trades as well as individual stock trades. And as long as this low correlation remains, sure, there might be a negative for the retail sector and that sells off, but other sectors move higher on different reasons. So we're still so far this year surprisingly low macro volatility. I
thought, which is a good kind of nugget to end on there. But I just wanted to ask as well about small caps, which kind of echo the way that some of us have been feeling about them. You say, looks like investors are giving up.
Yeah, you can look at the options. You can see the bid to the upside options compared to the bid to the downside options. And we have been seeing previously investors looking for that small cap pop. And sure, we've seen a couple head fakes, but the setup in the options now is pointing towards not a lot of people looking for that small cap pop anymore.